Hello and welcome to the Weekly Market Metrics. I'm your host Sandeep and we are in week 15 of 2026. It's been quite an interesting week on multiple fronts. On one hand, there are signs of a possible ceasefire taking shape, but at the same time, we are still seeing some escalations like the recent bombings in Lebanon. And then zooming out, two completely different kinds of milestones stand out. We have the Artemis program pushing the boundaries of human exploration, taking us back towards the moon. And in parallel, Anthropic continues to advance AI with its new model, Mythos, expanding what machines can reason and create. So we have this strange contrast of sorts. On one end, we are exploring the frontiers of science and intelligence, literally and digitally, and on the other hand, we are still deeply tribal in how we deal with conflict and geopolitics. Back to more mundane things like the markets. We did a decent bounce through the week, recovering close to 6% from the recent lows. So in a way, markets seems to be focusing more on resilience rather than the noise around. Anyways, let's get to the charts and see how the price action unfolded this week, and we'll also look at what could be possible in the week ahead. Do note there's a minor change in the structure of the weekly market metrics episode. Every episode would now start with what happened last week, and then we will move to what we expect to see in the coming week. The other sections remain the same. Let's start with rate of change across different indexes. This week, all the four indexes we track, Nifty, Bank Nifty, Midcap Nifty and SENSEX, finally closed in the green after being in red for close to 6 weeks. Bank Nifty led the pack with a solid 8.47% gain, followed closely by Midcap Nifty at 8.16%, while Nifty and SENSEX both climbed about 5.9% and 5.8% respectively. It's a welcome change after sitting through one of the worst monthly crashes in over 5 years in the month of March. Well, this bounce was largely expected given how much the market fell last month, but now we just have to see if this momentum continues for the rest of the month. But I would like to temper my expectations as we aren't really out of the woods yet. If you look at the indexes on a YTD basis, all four indexes are still in red. Midcap Nifty is down the least, followed by Bank Nifty. Nifty by itself is down around 8% and SENSEX is down 9% for the year. Now let's look at Nifty on various time frames, starting with the weekly. Now this week Nifty formed a strong Marubozu candle piercing through almost every resistance we discussed in the last week. The only level left standing is that of 24,300 and the index comfortably closed about 24,000, ending at 2451, a massive jump of 1,338 points of 5.9%. The weekly range was a huge 1,531 points, which is about 6.36% of the spot price. We finally got the range expansion we were looking for, and it happened decisively on the upside. Moving on to the daily time frame, we saw 4 green candles. Monday started strong with plus 1.12% gain, followed by a steady 0.68% on Tuesday. Wednesday was a standout. The ceasefire announcement triggered a massive 730 point gap up, a huge 3.16% move, and the day ended at 3.78%. Thursday was the only red day of the week, seeing a minor pullback of minus 0.93% towards 23,700 levels. However, we regained momentum on Friday with a solid plus 1.16% up move to take the index about 24,000. Moving on to the hourly time frame, the index crossed the 50 EMA on Monday and chopped around on Tuesday, but after Wednesday's massive gap, the price is now sitting way above that EMA. Short-term trend followers likely made some decent money on that Wednesday move. But as always, we are facing the classic dilemma again. Will the EMA catch up to the price, or will the price pull back to the EMA? I'm personally hoping for the former, but let's see how it plays out. Now, talking about Nifty's weekly expiry that happened on Tuesday, April 7th, The at-the-money straddle opened with a premium of 210, but the day's range ended up being more than twice that. Non-directional players likely struggled to manage their positions, but it was a great day for directional traders, as the index consistently made a series of higher highs and higher lows throughout the session. Moving on to Sensex on a weekly time frame, it was very similar to Nifty. The Sensex weekly candle was a strong green Marubozu candle again, gaining 4,230 points of 5.77%. The weekly range for Sensex was even more impressive at 4,907 points, which is about 6.33% of the spot price. On the daily time frame, Sensex wasn't quite able to close above Wednesday's high of 77,635, something Nifty managed to pull off. Other than that, the price action was almost identical across both indexes. That was really the only notable difference between them this week. Talking about the Sensex weekly expiry that happened on Thursday, April 9th, it was a relatively smooth expiry except for a chaotic first hour where the index swung wildly in both directions. After that initial volatility, it settled into a consolidation phase till about 2 p.m. It turned out to be a great day for sellers, but a tough one for buyers, especially considering that the at-the-money straddle opened around 530 and spiked 100 points in the first hour alone. Moving on to Bank Nifty. On the weekly time frame, the index gained 4,364 points or 8.47% for the week, forming a solid green candle and closing right near the week's high. Those upper and lower wicks which had dominated the weekly chart for the last 3 weeks are finally gone and are replaced by pure bullish momentum candle. On the daily time frame, the pattern mirrors Nifty and Sensex, but the percentage move for the week was significantly larger. The Wednesday gap up on Bank Nifty was especially massive, clocking in 4.15%. On the hourly time frame, Bank Nifty stayed below the 50 MA on Monday and chopped around through Tuesday before finally breaking and staying above it from Wednesday onwards. By the end of the week, the index is sitting well above the EMA, and because of this, the short-term trend following bias for both Nifty and Bank Nifty is now firmly long. Now moving on to what to expect in the coming week. Talking about Nifty first, on the weekly charts, resistance sit at 24,300 followed by the psychological 25,000 mark. For support, we are looking at 23,850 and then down at 22,550, which are this week's low. On the daily time frame, the resistance levels remain the same as the weekly. However, our primary support is the 23,700 to 23,450 zone, where that massive gap still remains unfilled. Now, based on the straddle price, the expected range for the upcoming expiry is between 24,330 and 23,773. Also, keep in mind that Nifty's next expiry has been moved to Monday, April the 13th, because the market will be closed on Tuesday 14th in observance of Dr. Babasaheb Ambedkar Jayanti. The overall bias for Nifty is definitely bullish, especially since we managed to close near the week's high. Moving on to Sensex, the straddle premium suggests a range of about 1,400 points in either direction. This gives us a rough playing field between 78,950 and 76,150. On the weekly chart, resistance is pegged at 78,550, followed by a major zone between 80,650 and 81,150. For support, we are looking way down at the 72,700 and 72,500 area. Switching to the daily chart, the gap between 76,350 and 74,700 should act as a solid support zone. And on the upside, resistance sits at 78,550 and then at 80,600. Just like Nifty, the overall bias for Sensex remains firmly bullish as we head into the new week. Talking about Bank Nifty, on the weekly chart, we are looking at a resistance at 56,150 with a higher supply zone between 57,100 and 57,700. On the flip side, supports are comfortably placed at 51,300 and 49,150. Now, looking at the daily time frame, the gap zone between 54,600 and 52,800 is the key area to watch. It should act as a solid support. As for resistance, it aligns with the weekly view, specifically that heavy 57,100 to 57,700 zone. Looking at the directional bias across the board, all four indexes now show a positive short-term bias. However, only mid-cap Nifty has moved into positive mid-term bias as well, while the other three remain negative on mid-term time frame. What this tells us is that while the week's massive up move has definitely shifted the sentiment to positive, the indexes still haven't cleared the 50 EMA on a daily time frame. And until we see a decisive close above the 50 EMA, we can't quite call this a return to a strong bullish momentum. Moving on to India VIX, it saw a massive drop of 26% this week, finally closing below 20 at 18.85. This market up move definitely helped cool things down. Hopefully, this is the start of the VIX returning to its mean, meaning we should see volatility gradually fall while the market steadily rises. Now, usually these periods where the VIX cools off are great for short vol traders. Let's see, fingers crossed. I wish trading was that simple, but for now, I'm staying hopeful. Moving on to sectoral performance, well, this week's performance was really something worth looking at. So we had Realty at the top with a whopping 12.97% gains, Auto at 10.6%, then Financial Services at 9%, Nifty Bank at 8.5%, and Nifty PSU Bank at 8% again. It's been such a long time since we saw such numbers in the sectoral charts. If you are an equity trader, then these are the sectors worth looking at. Usually you would see some kind of a trend persistence in sectors, and that would happen for a few weeks at least. And then the cycle changes and other sectors come in. For instance, IT was trending up for the past couple of weeks, and then this week with all the positivity around, Realty is kind of making a comeback. Now, given that sectors are all cyclical, we may again see IT come back. Let's see. Talking about the commodities this week, the leaders of the pack were the industrials. Copper in this case was up 4.8%, and then in terms of precious metals, we had silver up 4.36% and gold was up 2.08%. With the uncertainty around the war settling down, crude is now down by close to 12% and natural gas is down as well by 5%. Now, I'm not sure if you remember, but I've always been saying that both crude and natural gas both are extremely mean reverting products. So if they shoot up for some reason, there are many macro pressures which usually bring them down. And that's what you're seeing right now. So that's pretty much in commodities this week. Now moving on to the summary. Well, after 6 consecutive red weeks, markets finally saw a strong bounce with Nifty gaining close to 6% and Bank Nifty leading from the front at a 8% plus move. The recovery was sharp, driven largely by mid-cap momentum and sustained follow-through. Volatility cooled off meaningfully with VIX dropping below 20, and sectorally we saw strong participation from Realty, Auto and Financials, indicating a clear risk-on phase. That said, while sentiment has improved, markets are still near key resistance levels, and it remains to be seen whether this is the start of a fresh uptrend or just some sort of a relief rally. Moving on to what caught my attention this week, well, I have 2 interesting recommendations for you. One is an article and the other is a podcast episode. The first recommendation is a New York Times article titled "My Quest to Solve Bitcoin's Great Mystery" by John Carreyrou and Dylan Friedman. The authors spent 2 years researching and investigating as to who is the person behind the name Satoshi Nakamoto. No spoilers here, and yes, in case you follow the crypto space, let me also shamelessly plug my 2-part series on crypto in India. My second recommendation is a podcast episode from the Knowledge Project. This one again is from the world of finance, and this is an interview of Walt Tenev, founder and CEO of Robinhood Markets, where Walt talks about everything from his childhood in hyperinflationary Bulgaria to a future where AI agents may handle 100% of customer finances. As always, the links are in the show notes. And lastly, moving over to events to factor in the coming week. Well, next week is a 4-day trading week, with Tuesday being a holiday on account of Dr. Babasaheb Ambedkar Jayanti. So that moves Nifty's weekly expiry from Tuesday 14th to Monday 13th. Other than this, there are no known events lined up. So with that, we wrap up this week's weekly market metrics. And if you find the series useful, don't forget to subscribe to this channel, and yes, do share it with your friends. Until then, stay curious, stay steady, and enjoy your weekend.